Hey y'all, hey, welcome back. I'm back, everybody. I'm so excited. I'm so refreshed, so relaxed. I had a great trip. So I am back to do another episode of my Mortgage Boss Talk Tuesday. And today I'm going a little bit later than usual because I'm trying to ease back into this thing called work because it was a stressful day today. But I do have a guest with me. Today we're going to be talking all about mortgage fraud. So if you clicked on this, you might be a homeowner currently, you may be a potential homeowner, and we don't want you to be part of scams and schemes. We want to make sure that you are aware of what you need to be doing and how people get caught. So we're going to talk about different mortgage fraud schemes that we see in the market in present day. We're going to talk about, red flags, what that looks like. We're going to talk about consequences of what can happen if you get caught. Because the big question I always get asked is, how they gonna know? So we're gonna talk about it, right? So you guys, I have someone here with me, a special guest. This is the Mortgage Match on IG. Um, Go ahead and introduce yourself.
Hi, I am Sahad Washington, the homebuyer advocate. My handle is the Mortgage Match on Instagram, and I am a licensed loan officer here in North Carolina and South Carolina, as well as PA, Maryland, Delaware, and Texas.
Okay. All right. She got a lot of licenses like I do too. So I feel you. All right. So some of you might be like, oh, but that's competition. Why is she bringing another loan officer? Because listen, y'all, we download our problems on each other all the time. Because
Yes.
doing this job is very stressful. And sometimes, believe it or not, we end up sharing stories about the same buyers that might be getting, declined at ABC Mortgage and then coming to XYZ Mortgage. It's like, wait a minute, hold on. This sounds familiar. So we really honestly, it's gonna be kind of kiki lighthearted or whatever, because I do have my wine. It's past Lent, so I can drink now. But I really do want to get some solid information out there, because a part of why I started my channel was because of some of the misinformation that TikTok was spreading. Some kind of way during COVID, it has gotten cool to be an investor or cool to be an entrepreneur. A lot of things have spawned out of COVID. And so, because loan officers and realtors were making so much money so fast, there were a lot of people that really didn't have an interest in impacting people or educating people or even providing themselves with any education to provide appropriate level of service. And they just putting any information out there and they just doing any old thing. And some of the things that you hear online, under the guise of hacks, here's a hack, right? um it can lead you down the wrong path, ultimately. And what you'll learn today is that there's really only one right way to do things, and that's to do the right thing every time. So, you guys, I want to talk and introduce the idea. So what is mortgage fraud? When you're not being honest, is when you're being deceptive. It could be intentional or unintentional, right? So it
Yeah.
can it can look a lot of different ways, but mostly as it pertains to mortgages, we only have really two reasons why people try to commit mortgage fraud, and that is fraud for profit or fraud for property. More often than not, people are trying to do whatever they need to, say whatever they need to be able to get the house that they told all their Facebook friends and all their Instagram friends that they were going to be able to get, because nobody wants to be embarrassed, about not being able to attain a home. Or they may could have been going through a home buyer journey for quite some time, and unfortunately, they've been running into no, 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 and may have been scrolling on Instagram or Facebook, and somebody said, all you got to do is, you know,
Yeah. All
you
you
know,
got to do.
all you got to do is, and they thought, oh, all I got to do, okay, let me do that.
Mhm.
All right. So basically, mortgage fraud is just, any level of dishonesty, anyway, anything that you're trying to do to advance your goal that is under the guise of deception. All right. So, Saha, do you find that in your career you've seen any mortgage fraud, a lot of mortgage fraud? Like, how would you put that on a scale? A little bit, a lot?
Daily, daily,
You must take a lot of loan applications. You can see it daily. Oh my gosh. Okay, tell me.
daily.
You do?
I do see it daily. And sometimes it's not intentional.
Yeah.
Like people don't know that what they're talking about is mortgage fraud because they are educating themselves via TikTok, Instagram, or this person told me I could do this. And they will come into their mortgage process believing the misinformation and challenging me as a loan officer. And I always put it out there, I don't want you to ever confuse your Google search with my mortgage license. What
Mm.
you're explaining is, and then we go over what exactly the fraud is, and they're like, oh, well, someone told me. However, a lot every single day, there's someone who tells me something, and I'm like, this is fraud. But they
Mhm.
don't know it's fraud. Sometimes it's innocent,
Sometimes
other
it's
times
innocent.
it's
Mhm.
not.
Yeah.
It's
Yeah.
it's it's not. It's calculated. Hmm.
Mhm. No, you're 1,000% right. Most of the time, it is innocent. It becomes oh, I didn't know, or they miscalculated the income, not necessarily misrepresented the income. Just a variety of different things. But ultimately, all we want you to do is tell the truth. That's it. I promise. It's that easy. And usually, if you're being honest, and we come across some different hiccups along the way, we're gonna try to figure out legal ways to make sure that you're able to overcome that, so that you will be able to attain home ownership. But again,
Hmm.
we're going to get into consequences and what that looks like on your end as well as our end, because believe it or not, you will find people in the mortgage industry that are willing to go along just to get a paycheck. Now, I want to set the tone here. This isn't anything that is designed to teach you how to commit fraud. This isn't anything that I am endorsing. It's just all the time when we run into people, just like Hasahad said, like, don't confuse your Google search or your YouTube. And I'm on YouTube right now. Like, you can listen to
Hmm.
me because I have 8 years of experience and I have closed $100 million in loan volume. But please do not think that you are the smartest person in the room, because behind me, I have an army of professionals that's going to double, triple, and quadruple check the work that I've done.
Right.
So don't get excited because I might have missed it. I assure you,
Right.
it's lots of people along the way that are there in place to make sure that we are not um, putting ourselves in a position where we are taking on unnecessary risk intentionally.
Mhm.
Okay. So different types of mortgage fraud. So y'all, let's get into it. So I told you the two big reasons why people commit mortgage fraud, but I want to share this information with you so that you understand why they keep asking me for stuff. Why they ask me for this document? What they need my ID for? You want to know why? Let's talk about it. Let's look at this. So this information here is from Fannie Mae. Fannie Mae is one of the agencies that we underwrite loans to. So loan guidelines. So sometimes we talk to people and they feel like they discriminating, they hating on me. They don't want me to get a loan. You know what I'm saying? Whatever. It isn't that. We have guidelines that we have to go by depending upon the loan type of loan product that you are applying for. It could be a conventional loan, a FHA loan, a VA loan, USDA. It could be loans outside of that are considered to be non-qualifying mortgages, where they have completely different rules. But ultimately, here are quite a few of the things that we look out for and things that we take training on every single year. We have to do continuing education hours to make sure that we're up on and know what's going on out here as far as some of the things that people are starting to do to obtain properties. So one thing is having a straw buyer, right? A straw buyer is basically somebody that um
That's it right there.
they're the ones that's out here that's like, oh, don't worry, you can use my credit. Don't worry, you can use all my information, and then on the back end, we'll just put your name on the title and stuff, and I'm out of it. So now you've obtained the property through a person that you really shouldn't have. Air loan is one that, I mean, that's kind of old school. That went with appraisals. It's kind of where you have a fake buyer and a fake property that doesn't exist so they could get loans. Um, Property flips. You know,
Mm-hmm.
FHA has a rule about flipping. So there's some mortgage fraud that's involved in that. I love me a good Ponzi scheme. I will watch American Greed all day long. And they always seem to be people from Florida. They always seem to be people from Florida. But you know, if you sit down and you watch you know, a good episode of American Greed, I guarantee you it's gonna most often than not lead back to some sort of property. And then some of these are just kind of outdated. We don't have a foreclosure crisis right now, so we don't really have foreclosure rescues. We don't really have short sale situation or anything. But the list goes on and on and on and on.
Mm-hmm.
And I wanted you all to have a general idea about, even though again you did your YouTube research and you might feel like you're the smartest person in the room, they've already done all the research that they need to know. They've been researching characteristics and why this loan didn't perform and why that loan didn't perform, and they put all of these things together in an electronic system, and they're like, okay, boom, this is what we're going to start calling this thing that they're doing. So really want
Mm-hmm.
to talk about just really four major types of loan fraud. One is identity theft, appraisal,
Yeah.
occupancy fraud, and the one that everybody seems to know is income, right? Don't misrepresent your income. So let's kind of take it one by one and unpack that. Okay. So Sahad, you know anything about identity theft? Do you see that? I know you say you see fraud
Yeah.
every day.
So identity theft is really common now. Since we're licensed in a lot of states, there's gonna be a really good chance we may never see you in person, right? It's not like you're walking into like a local branch or office. We might be states away.
Mm-hmm.
So a borrower applies online, provides all of the information that is required for an application, and then it turns out that this is not even the borrower, that this information, the borrower has no idea that their information has been used to apply for a mortgage.
Mm-hmm.
And I'll just say that this happens a lot within family members, especially older family members. That's where I see it the most. Where someone in the family was like, "Oh, we'll use grandpa's information," because you can't discriminate about against the age of a person trying to obtain a mortgage, right? Well, grandpa has Alzheimer or dementia. Grandpa is on assisted living. Grandpa, it can't even communicate with me directly and has no idea that his information is being used to obtain a mortgage. But grandpa gets Social Security and a pension, so the income's there. He's been living at the same place for many a years. Grandpa's account, someone could be the represented payee, so they have access to grandpa's money to show that the down payment and closing costs are there, but grandpa doesn't know. That is identity theft. And it's common. It's common. That's the one that I see a lot.
Yeah, you know, I mean, when you say family members, boy, family will mess you over every time. I remember one of the first loans that I did, like, and I mean, like one of the very first ones that I did. This was when you could get clear to close, get the documents out. This was before Treat, all in the same day. So we hit up the closing day. And the lady was like, "Oh, she's buying a house," and we called and was like, "No, girl, you're not, because we're trying to figure out what is this purchase that happened? Like, what happened? Because we'll repull your credit. For those of you that don't realize, and we're gonna touch upon that in just a minute. The credit card came in the mail. The grown daughter that lived in the house, decided she was going to go and buy everybody Christmas presents with the credit card that came in the mail in her mom's name. Her mom had no idea, and her mom wasn't able to get a house. We were like, "Well, you can get one. You just got to press charges." And of course, she didn't want to do that, right? So family will screw you over every single time. Okay, so
don't let somebody die. Don't let somebody die, and there's a property involved, and there's no will. There's no estate. No estate planning was done. Okay, I've seen siblings. Horrible things people will go through to try to obtain property. And who's got the rights to this, and show up with paperwork? Yeah,
that is very
it's really bad.
Yeah, identity theft is, again, when we start talking about, is it for profit, is it for property, it's usually going to be trying to get the house in some capacity. Even if you're just going to get it and abandon it or sell it, or what, you trying to get the house in some way. Your identity theft can look a lot of ways. And we're going to talk about what those red flags look like when we're asking for information to document who you are. First, you're going to complete a loan application, and you're going to tell us your name. You're going to tell us your social security number. You're going to tell us where you have lived in the last 2 years. What else is on there? Where you've worked for the last 2 years. Your birthday is on there. And
dependents. Are you married?
All of it, yes. And what we're going to do is we're going to cross-reference that with some other stuff to make sure it all matches up. Okay. And that's where things fall apart for the public, and they don't realize that. So if someone has been a victim of identity theft, there are particular protocols that you are supposed to go through, and there's documentation that's associated with that. If you think that a $1 trillion industry don't have access to Google and doesn't have access to internal databases, spoiler alert, we do. So we're asking for identifications in multiple ways to make sure that you are who you say you are, so that you're not taking someone's property away from them in like a refinance and they don't realize it. Or you're not trying to obtain a loan for somebody that's in California and you're in North Carolina. Like I said, we're going to ask for multiple documents, and we're going to make phone calls to make sure that you are who you say you are every single time. So Had, you talked a little bit about the elderly.
They are a target.
So offline, we talked a little bit about wholesaling. Can you talk a little bit about that?
Okay. So the function of a wholesaler, and a lot of people have got it in their brain that they're going to house hack. We're going to be wholesalers. So what a wholesaler's job is to find a buyer and connect them to a property that they may not have found by way of their realtor. They're the middleman. Okay. You don't need a wholesaler. This is one function. You do not need a wholesaler. However, let's say you have a real estate agent, or you don't have a real estate agent representing you. You're looking for a property and you send somebody else to do it. Hey, I found this property that's for sale. And that wholesaler goes and negotiates the deal with the listing agent or the seller of their property. And they connect the two of you. The wholesaler has negotiated a fee for their services, okay, which then has to be wrapped into the loan. So if you're buying a house, let's say the house costs $400,000, right? And the wholesaler wants to make sure that they want to be compensated $10,000 for their services. It's going to come one of two places. It's either going to get added to you as the buyer, or it's going to come out of somebody's commission or somebody's profit. So if the wholesaler is working for the seller side, they're going to try to take it from the seller. If they're working on your behalf, they may try to take it from you. If they're working, if they work something out with the real estate agents, they may try to take a piece of it or all of it from their commission. Newsflash, real estate agents are not giving up their commission for nothing. So it's coming from one of those.
Even though I do want to go on record by saying, and realtors, please don't get in the comments. Y'all do know that realtors can help you pay your closing costs. All right, I'm done. Go ahead with your story.
Say it again for the people in the back.
Go ahead.
I have had a situation, and this was this year. We had an elderly woman selling her property. We had a brand new first-time home buyer couple that I represented as their lender, and I had a real estate agent that represented the first-time home buyers that was brand new. So he was inexperienced, but he was still their real estate agent and represented them. Mm-hmm. The seller of the property, which I found out later, was a much older woman. Her husband had passed away. We're not going to say she was distressed, but she needed to downsize immediately because her husband passed away. I received phone calls from an individual pretending to be a lender, looking for updates on when is this loan going to close. We need to make sure that this loan closes on a certain date because our seller is going to purchase another home. And the woman was going to purchase another home. Mm-hmm. That is normal. If you're getting towards the end of a transaction and we don't have a clear to close, that the lender on the other side, if they get your contact information, may reach out to get updates. Mm-hmm. But the way this person was reaching out to me, it just sounded, it was strange. Now, my antennas went up. Yeah, my antennas went up. I'm almost 10 years over 10 years in the game with finance and, over 7 with mortgages. I've seen a few things. Now, this person that contacted me they represented themselves as the lender for the transaction. The next phone call that I got was, we're the listing agent for the property that the seller is going to buy. The elderly woman is going to buy this other home, and that listing agent is now contacting me. This time it was a woman. And I was like, well, that's interesting because the name you gave me, that's not the name of the lender that called. And he said, well, what lender? She's buying in cash. So now I'm really concerned because I just had a lender contact me. And although they didn't get any information out of me, what they stated was in line. Now, here's where it gets funny. When I get a copy of I asked the listing agent on the other side, and this is uncommon, but I expressed to her my concerns, send me a copy of your contract. When I look at the contract, the names that were listed on there did not match the names of the individual who contacted me. I then contact my client's buyer's agent, and even though he's new, I said, how did you find this deal? He said, well, the guy's name, he said his name was Kevin. Well, is Kevin the lender? Because Kevin who called me. No, his name's not Kevin. So it was starting to get really confusing. This person that was in the middle of the transaction was a wholesaler. And I'm just going to say this, if they ever see this, they were a terrible wholesaler because not only did they not write up their contract appropriately, you didn't have to lie about being a wholesaler in the transaction to any party here. You did not have to lie. Wholesaling is not illegal. Mm-hmm. What was fishy is that they were charging the seller, this old elderly woman, an obscene amount of money to be her wholesaler, her consultant, right? Now, let me get even deeper into it. The house was listed for $250,000, okay? They were trying to charge her $275,000 for the house. So she was so confused. Well, why do I have to give this money from the profit of the house? Where is it going? She was so concerned. So somebody got in contact with me and I got everybody on a group call. I said, we're going to get to the bottom of this or I'm going to start reporting things. Mm-hmm. Realtors don't want you to report anything. Lenders don't want you to report anything because it stops us from working. It's bad for our reputation. It's just all around not a good look. Nobody wants to get in trouble for doing something unethical. So I don't work for realtors. I always work for my clients. So I'm real fast to be like, explain to me what's going on, or we're going to have another conversation with somebody else above you, right? It's above me now. So it turns out that nobody knew who these people were. The elderly woman was approached at her home by these people that said they were working with her listing agent as a consultant. The actual listing agent on my contract was out of the country. He was on vacation. You know how I found out? Instagram. So how have you been communicating with me? And you're
a
you're in
detective. Okay.
Mexico, right? That is an example of how a wholesaler would be deceptive. Now, it's not technically fraud because wholesaling is not illegal, but it's deceptive. And it was fraudulent to the person on the other side because she didn't know. She thought she was being represented by her listing, her agent. And really, there was this other entity that was going to take money from her, and she wasn't aware of it. She's elderly. She had just gone through, she's now a widow. She had to make a life transition. That is people preying on those that are uninformed. There it is. Nobody knew. Nobody knew what was going on.
So it's just something that you got to look out for effectively. I think that's kind of what you're saying.
Yeah,
wholesaling is something that you don't have to have a license to do either. Now, I have very limited knowledge of wholesaling, which is why I let you kind of explain it. But I do know you don't have to have a license. And again, in the new age, post-COVID, all you got to do is, and I can make money real quick. People started to jump into it because they saw it as an opportunity to fill what they saw as a gap. And it's been exploited. And I do know for a fact, I'm telling you what I know and not what I heard. The real estate commissions are starting to reevaluate. So just know it may be coming down your lane really soon. If that is, the pathway you've chosen to be in real estate, just they're probably going to be tightening up a lot on that. But yeah, in identity theft is a big thing. I got a document here real quick, and I can show you just really some of the major red flags, and a lot of these. Well, no, I'll get to that. I'll get to that in a minute. All right. So the next type of theft, next type of fraud is appraisal fraud. Again, I'm just going to touch on it lightly. It's not really something that we see anymore, especially since homes values have been skyrocketing as much as they have been. But it used to be before that appraisers were allowed to have relationships with lenders and relationships with realtors. They might go out, kick it, hang out, best friends, whatever. And if a really well-known realtor or really influential realtor reached out to appraiser Bob and been like, yo, hey Bob, I took you out and get you a couple drinks, haha, I need you to appraise this property over here. It's gonna be a big payday for me. It needs to come in at like $1.5 million. Okay, got it. You go out, whatever, $1.5 million. And then that person that he had that relationship with, like, look here, go buy yourself something nice. Well, what has happened since the days of the Wild West in the early 2000s is we have an intermediary. It's called an appraisal management company. I don't know your appraiser. I have literally had people say, Joy, make sure you send a good appraiser to my house. Joy, make sure you get an appraiser that, isn't going to give me a low value. I don't know these people. But okay. All right, girl, I got you. I don't know these people. I never, ever, ever. Honestly, I don't think I have ever spoken to an appraiser in my life. And I mean like inside work or outside work. I have seen an appraiser speak on a panel of people, but I don't know any appraisers. Most loan officers don't. And if they do, they're not picking up the phone, sending a text message saying, hey, their value, this client's value came in low with XYZ Bank. Can you go out there tomorrow? Oh, okay, girl, I got you. We have procedures, things that are in place that
You can combat it too.
I can't influence
Change the appraisal.
them, and the realtor can't influence them on whatever the value is. What you say?
I said you can challenge, and you can challenge appraisals if you don't like the appraisal. There is a way to challenge it, right? You don't
Yeah,
in
you can appeal. I mean, I haven't had a whole lot of them be successful, but you can definitely appeal if you feel like someone has undervalued your home. I guess now that I'm saying this out loud, that could potentially be a thing in the wake of what we have realized as a appraisal I guess what appraisal discrimination, or there
Yeah.
have been many instances where appraisers have gone to African American or minority households and given a lower value than they did when they thought that the family was of another background, another race. In theory, I guess that is somewhat fraudulent if it's done intentionally for the purpose. If let's just play the scenario out, right? If that appraiser knows who's buying the house and they're trying to get them a good deal, then it is possible, they would give a lower value. But what I can tell you is, and again, I'm telling you what I know and not what I heard. I know it's a lot of stuff out there in the streets, but y'all don't understand the way that it works behind the scenes. A lot of these theories on what y'all think that we doing to hurt you, it isn't even possible. It's not even possible. There are checks and balances in place. If our appraisal department that we have every lender has like an appraisal panel. They're gonna take the appraisal, they're gonna look at it, they're gonna do their checks and balances, and like, this makes sense, it's high, too high, too high, too low. Oh wait, hold on, something's not right here. You got to realize that whether it's an appraisal fraud where they were trying to give too much value, or something where it may be too little value, there are checks and balances in place, but it does happen. Sahad is from Philadelphia. I don't know nothing about no Philadelphia. I was born there, but tell me, have you seen anything like what I just described as far as appraisals coming in low, particularly for minority communities?
1000%. It's part of the reason why I work where I work now, because of their appraisal management system that they have in place. But I can say for every financial institution that I have worked with prior to this, right? And if you find me in LinkedIn, you can know who I worked for. It's common. And I'm going to tell you the reason why it's common or biased. If the appraiser is unfamiliar with the community, right? You have appraisers that come from miles away that don't know anything about a major city. They don't know anything about neighborhoods. Some of them never seen a sidewalk in their life. And this is the person that is coming in to determine the value of a property based on the comparables in that neighborhood. When that person lacks experience or knowledge of the community, especially a big city like Philadelphia, it is a pocket of neighborhoods. You could be one place and the value be very, very low, crime rate through the roof. You could be a couple blocks over and you're looking at houses that are some of the most expensive houses on the Eastern Main Line, only a couple blocks away from each other. So if you have an appraiser that is not knowledgeable of the area, yeah, they're going to have a bias. They don't know anything, right? They don't know the city. Then you also have appraisers that, I'm just going to say it, pale, male, and stale. Shout out to Dustin Owens. They are older, of a totally different generation, when redlining was very prevalent and still is in some cases. They are biased. The appraisal industry, there's like less than 1% of minority appraisers, right? So what do you get when you get a bunch of old white men appraising minority communities that are from a different generation, a different era, and may have their own opinions, okay? And then are surprised when the houses are coming in undervalued, when the families are being discriminated against. There's been plenty of news articles, one that went national, until the appraisers, the way that appraisals are set up and how one becomes an appraiser. until that loosens up and there's more diversity there, you're going to continue to see appraisal discrimination right now, right? Unless the lender that you work for or work with has an appraisal management company that has things in place to prevent that. I know that my company that does our appraisal management, you have to live within a certain radius of the homes that you're appraising. Why? Because if you discriminate against that household and you ruin the value, you're going to ruin your own too, of your house where you live. So you're less likely to be biased because you live in that community.
Yeah, absolutely. I love that. That was a very thorough explanation. I appreciate it. Yeah, y'all. Again, this was something that we saw back in the day, not something so prevalent now. But up next, we getting ready to start getting into the sexy fraud. Okay, I covered the little yang yang yang, but we gonna get into the sexy fraud. This is really the fraud that you see on American Greed. These are the fraud schemes and things that we see every day. Phone calls we have, things that people are saying on Instagram and on TikTok. That all you gotta do is, okay. We're gonna talk about occupancy fraud.
Lord.
Now, I want you to understand what occupancy fraud is. And we're going to talk a little bit about why people do it and just some examples, because some of y'all think y'all the smartest person in the room and you're not. Okay. And I'm just going to call a thing a thing. Now, none of my subscribers will ever do anything like this. But to the people that are not subscribed, that may watch this, that's what I'm talking about. So, occupancy fraud is when you are trying to be deceptive about your purpose for obtaining the property. When you look at a home loan application, there is a space. And it's one of the first questions that we ask, actually. We're going to say to you, are you going to use this home as a primary residence, a second home, or an investment property? And they all have different definitions. And I want to get into those by using a few examples, okay? So, occupancy fraud could look or sound something like this. And then it could be innocent or not, but it could be something like, hey, Joy, I live in an apartment complex, but I go to Miami all the time. I love Miami. Me and my homegirls, we in Miami once a month. I want to get a second home in Miami. So me and my homegirls can go down there and kick it, and we're going to chill, and it's going to be the most amazing thing. It's going to be a movie every single month. Okay? Okay, so you're in an apartment, but you want to get a second home in, okay, got it. So, all right, so a second home is really going to be defined as a property that is vacant when you are not there. That don't mean your homegirl stay there sometimes. That don't mean your homeboys come kick it sometimes when you're not there. It is supposed to be exclusively for you. And if you're not there, nobody else is there either. You understand? That could be examples like, I live in the north, I'm retired, so in the summers I'm going to buy a second home in Florida because it's cold. I want to be in the warm weather, and then, when the seasons change, I'm going to go back to my family in Philadelphia or New York or wherever those people are from that are in colder climates. A second home can look like, I live in Charlotte. I live uptown. Okay. I live in Charlotte. I have a condo uptown. I'm always uptown. But I really, really love Lake Norman. Lake Norman is not super, super far away, but based upon the geography, people do have lake houses, right?
Mm-hmm.
If I live in the mountain region of North Carolina, I may have a regular home, but maybe 30 miles away, I'm going to have a cabin.
Mm-hmm.
Second homes are going to be defined by how often you plan to be there. Is anyone else going to be there when you are not there? And then the common sense element that we add to those definitions are, does this make sense? Would somebody use this as a second home or a vacation property?
Right. Like it's by the beach, makes sense. It's in a touristy area, makes sense. It's in a desirable location in any capacity compared to where you currently live, right? Makes sense. What
Yeah.
doesn't make sense is you want to buy a house 20 miles away, but you're still going to the same Walmart. That's
Mm,
not your second home.
mm. Probably not going to work out in your favor. So when we get these applications, like I said, Airbnb is a really big one. When that was kind of coming on the scene, we didn't know what to do with it. And a lot of these fraud schemes, the wave comes ashore before we even know that the wave is coming. It's like, oh, whoa, wait, we don't have any. Airbnb popped up all of a sudden. We didn't know what to do with it. We just no, 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 no. Okay. Now we do have guidelines for it, but you want to be really careful if you want to get an investment property to rent out to people seasonally, day to day with short-term rentals. There's not gonna be no second home. I don't know how to it's not a second home. Okay.
Mm-mm.
We are going to have very casual conversations with you. Like, I'm very good at that. I'm gonna chat you up and we're gonna talk and talk and talk, and I'm gonna know everything I need to know before I start
Mhm.
asking questions in details about the loan application. And I remember I had a really young girl a couple months ago. She reached out to me. She said that she lived in her parents' house. She recently graduated from college, and she was wanting to buy um, a home so she could have an Airbnb, and she wanted to take advantage of first-time home buyer programs like down payment assistance. It's not for that.
No. And
So
that's a big one.
it is a
You
big
cannot get down assistance on an investment property.
Mm-mm. No, you cannot. Y'all, the second home. Okay, so let me get to definitions. So a primary home, you live there, you work there, you sleep there more than 50% of the time. Okay.
Mm-hmm.
I'm here, like this is my address, my mail comes here, my driver's license is here, my income taxes, everything about me in my life is tied to this address. A second home. Okay, I got a lake house. I go over there sometimes, not all the time. What they say, I'm here for a good time, not a long time. And that's going to be something that's really kind of up to about 6 months. So you might half and half, like I talked about with people that go from the north to the south seasonally. Again, nobody's there when you're not there. And I'm not talking about a little onesie twosie. I'm talking about, in your head full well when you are typing up your information on your loan application that you are gonna have mama and them come over and they gonna be there too. Okay. And then the third property type is an investment property. And an investment property is designed to make you some money. Believe it or not, you can have to make some properties investment properties, even if it's not your intention to collect any rent. Okay. I'm not going to get into the weeds of that, but just understand that there are definitions for all of these things. And TikTok and the all you got to do is has kind of put some of that out there and let people know, why are people doing this? people are going to misrepresent the purpose of the property because they know, one, you're going to have to put down a bigger down payment. Two, the interest rates are going to be higher.
Yeah.
Three, you're going to have reserves if you have an investment property. So there are a lot of things. It is significantly higher in terms of the outlay of cash that you have to invest to get an investment property versus a primary residence. And it used to be a lot more fluid to go between a primary and a second home, but they tightening up on that too. So that's
You got an example
one. Huh?
The example for investment property occupancy fraud are unlimited.
Oh yeah, I got
Unlimited.
one. Oh, I got more. Yeah. So another one, and I mean, like, I want you to tell, because like I said, we see this all the time, and I think it's important that you all know and really understand. And the reason why occupancy fraud is so near and dear to me is because I worked at a bank and I saw one of the veteran loan officers get walked up out the building, high performing loan officer get walked up out the building because he was on a recorded line coaching someone on how to answer the questions and how to position it so that it didn't have to be an investment property. Let me tell you what I'm not going to do is that I'm not your girl. So get somebody else to do it.
It's not worth it. I have two quick examples of occupancy fraud for this. All right. So number one, and I think this one is bold. Married couples where one person owns this house and then they ended up getting married and now their spouse moves in, right? And then they decide, you know what, we want to buy an investment property, but we don't want to put down all that money. And so I'll have somebody call and say, well, my spouse, they're buying another house and they've never bought a house and we want to take advantage of first time home buyer benefits and blah, blah, blah. Okay, they want to do it as their primary residence. On your application, are you unmarried or married or separated, right? I can't tell you how many people say that they are married and then want the spouse to buy a house as a primary residence, right? And when I come back and question them, they're like, well, we're separated. Oh, you are? Okay. Let me see your separation agreement. There are certain states that don't require a legal separation agreement. Pennsylvania is one of them, right? So here's some other things. Let me see the utility bills of the other residents that you're living at since you're separated. Make it make sense. There's one. A second one is people that have a primary residence and you're going from a 5-bedroom, 3,000 square foot house and you decide that you want to go buy a duplex. You're going to move into a duplex, okay? And the duplex is going to be your primary residence, or this other smaller home is going to be your residence, okay? But the logic of it, okay, you're going to rent out your house. Let me see a copy of your lease agreement. And make it make sense. You have children that go to school in this county, in this region. They're not about to graduate, right? And you are going to move all the way over here, your family of 4, as a primary residence. You're lying.
Yep.
All day long.
Yep. That's what common sense come into play.
Right. Like, who are you kidding?
Yeah, I think the biggest takeaway about this is that we have bullet points and things that we go by, but the reason why I hope AI don't take my job is because we have to assess what makes sense and what doesn't. Certain behavioral patterns happen in certain age groups. I'm 40 years old. I'm not downsizing no time soon. If I was 65, okay, cool. Yeah, I'll go for that. That makes sense. What she just described makes absolutely no sense. That's not normal. And so we're going to push back on that. Now I will tell you, I had an underwriter one time. the husband and wife had broken up. I think they were completely divorced, if I'm not mistaken. And so as the man, he said, wife, you have the house with the child. I'll go and I'll get me something for me. But I'm not going to go far. I'm going to just, but me and you is no more. She could not wrap her head around the idea that this man was like, no, my child needs a bigger space. They can have it. I'm going to go over here and I'm going to downsize. Me and the lady didn't work out. She could not wrap her head around it. And she was like, nope, 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 nope. When I ran that thing as high up as it could go. Cause I was like, now y'all know. And now that was a woman. Now that was a woman underwriter. When it got to a man, he was like, the man was like, of course this makes sense. Yeah. So we looked at it like, does this make sense? In that example, yeah, like, okay, it's just you. It absolutely makes sense. You can have a house. You got the kid there. You don't want to disrupt that. That's fine. We're evaluating what makes sense and what doesn't. And sometimes y'all just a bunch of doesn't make senses. Okay. Shout out to the chat. Terrell, hey. Hi, Terrell. Terrell said, y'all ain't getting over.
At all.
And then shout out to another content creator I got here, Mr. CKB. CKB, he is an attorney. Well, not an attorney just yet. He has a YouTube channel about a law student, a particular law student, where he talks a lot about different cases that are going on. He adds his own special sauce. He's from up north. He's from New York. And he says that's all sorts of fraud, from business records fraud, real estate fraud, likely wire and mail fraud. Yeah, you absolutely, all that jazz. Yes, you are correct. It's all kinds of fraud. But like I said, this occupancy fraud is really where the rubber meets the road for a lot of people. People that could be getting a little bit older and they're headed towards retirement. They see the finish line. I'm going to be retired in 3 years, 5 years. Hit us up. Hey, I want to buy a primary residence in a whole different state. It's going to be near my grandkids. I'm so excited. I'm going to move there in 3 years when I retire. Okay, that's an investment property. Let's go ahead. That'll be a minimum of 15% down. Your rate is going to be a point higher than the going market rate. Oh, whoa, wait, no. I'm going to live there. No, not today. You're not. You know. So when you fill out the loan application and you get all the way to the closing table, you sign a document saying that you're going to occupy that residence within the next 60 days. So that does not work. Okay. So that's usually something that's kind of like, oh, I didn't know. But then sometimes it's people that, they'll call me, they'll call Sahad, then they'll call a third person. And now they've gotten 3 different opinions, different pieces of information. They got their whole story together and they're ready to run with it. But y'all, we gonna know.
Yeah, my favorite is, well, the loan officer told me that I was able to do that. Well, then go over there then. Because it's go with them. If they told you that you could do it, go ahead. Yep.
Let's see. Line about a second home versus an investment property. Like I said, the purpose that people do that is for the rates and the down payment more often than not. I don't know any other reason why somebody would do something like that. But people will literally call geeked, hyped, and say up front, I'm buying an investment property. They give me the whole rundown. I give them well, what if it's a second home? Let me tell you, when we start doing the what ifs, we're done. I'm not talking to you anymore. And I mean it. You're not going to what if scenario me to death so you could pull out all the information. So now you can craft your story for what it is that you trying to get around. That isn't going to work. At least, I mean, that may work for some loan officers, but that isn't my judge. But it does happen. And it's a red flag, if I'm going to be very honest. When you have talked to thousands of people, you don't realize how many people we talk to. We might only close, 50, 60 loans a year, 70 loans a year, or whatever the number is. But we had to sift through a whole lot of people to get to those closed loans.
Mm-hmm.
We heard it all. It's not
Yeah.
a whole lot that's going to sound new or shocking. And because we've talked to so many people and we have an idea of what makes sense and what doesn't, we have a gut feeling like, okay, oh,
Yeah.
you were too excited. Oh, you asking a couple too many questions. Oh, why are you using those type of words? They must have talked to another loan officer and picked up some new vocabulary. You know? Mm, you know, they do all the time, and it's so impressive. So impressive, you know. I'm like, wait, ooh, hold on. People don't talk like that. Why? Uh-oh.
That's so funny.
It's the truth. Like, y'all, we love a good vocabulary word. Um,
Sometimes I educate though. Like if it's depending on the situation, like if it's the uninformed, if it's the underserved and the uninformed, I will take the time to educate them on the process and go over this is the guideline, right? Explain to me, tell me your needs, wants, and goals. And I'm
yep.
going to show you how to legally get there, right?
Mm-hmm.
If they truly come in with the I just don't know and I'm going to, the internets for my information, sometimes a lot of times I'll stay with them and like really break it down. This is how you start your investment portfolio. But you got them scammers out there that think they know everything. And
Mm-hmm.
no.
And
There's
that's the
nothing.
gag too. Not only do we have an ear to determine whether or not you talk to multiple loan officers, we have an ear to know if you got your information from Instagram or from TikTok. We own the same internet everywhere. Y'all, Google is at the same house, everybody's house. Everybody's internet goes to, they www, it goes to the same internet. We see the
Yeah.
same things. And I say that to say, oh yeah, I want a house hack. Oh, all right. Know where that came from.
Yeah, hack yourself right into jail.
Some of it's so true. And I'm let me never mind. I'll come to that later. Let me get off my soapbox. So yeah, asking a lot of what if questions makes me like, I don't know about that. Being dishonest about who's going to live in the home if a loan requires all occupants' income to qualify. Y'all, down payment assistances are good for this because down payment assistance is not for everybody. I say it all the time. It is not a birthright. It is something that is supposed to be a helping hand. It is going to be limited in who that hand is helping. Most down payment assistance programs are going to have some sort of income cap, some sort of purchase price cap, some sort of debt to income ratio cap, maybe even
Where you live.
where you live. Yes,
Right.
maybe you have to live in a particular census tract or geographic region to get X number of dollars. If on the loan application it's like, okay, even if you're not on the loan, we need to know who in the house, who gonna live here, how much money do they make. And if you're like, oh no, it's just me. It's me and my 3 kids. They 6, 7, and 8. They don't work. Okay.
Mm-hmm. Or the fiance that doesn't live in the house and she's not going to be living there, but you're engaged.
Right. Mm-hmm.
Right. They won't be living there.
Because you want to, take advantage of being a first-time home buyer. You've got to be honest because at that point we're now tiptoeing on the next type of fraud, which is income fraud. And again, here we go to how they gonna know? How will they know? Um, so what's income fraud? What does that look like?
Income fraud is when flat out you either inflate or deflate your income that you receive. And this looks like fake pay stubs. Okay. If I had $1 for every time somebody gave me a fake pay stub, I would be rich. Okay. Fake pay stubs, fake W-2s, fake tax returns, fake bank statements, just to falsify your income to either gain something, like someone trying to get down payment assistance may try to deflate their income on paper, or I'm gonna slow down. Let these last couple of paychecks be real low, right? So that I can qualify. Whatever reason people think that works, it does not. Or boost their income so that they can qualify for more house.
Mm-hmm.
Yes, income.
Now, one way of legally inflating your income if you need some additional money is having a non-occupying co-borrower. It's completely allowed for most loan products. If that is your situation, talk to your loan officer about that. But we're saying we're generalizing some of these things. There's going to always be exceptions, but for the most part, we are talking specifically about what comes across our desk on a regular basis that don't look, feel, smell, taste quite right. Okay. So yeah, income fraud is a big one because people want to do whatever it is that they need to do to qualify for that house, especially since these interest rates have been going up so high. I think we kissed 7% at some point. And, the home prices have literally doubled from 5 years ago. And so people are feeling that they'll never be able to qualify for a home, or they may have been just right there and it's just out of reach, and they need to do some things, make some things shake. I tell you this, now, prior to me being in the retail sector, I worked in call centers, which is considered consumer direct, but I call it a call center because I want everybody to have a appropriate visual so you know what the job was like. I pick up the phone, hey, what you want, do the application. All right, have a nice day. Okay, imagine my surprise when I'm working in the safety and security in the nice warm bubble of a bank where compliance has compliance. Okay. Like calls are recorded, like, oh no, we can't do that. What do you? And I get out here in the free world and it is a freaking free for all. I had a guy apply for a loan with me, and we went through everything, and I'm like, you make that much money doing that job? And it's another thing, y'all. We see so many incomes, family and friends. We know how much money you make. We know.
Yeah.
We know. I mean,
Because,
it's not even like none of that. Like, oh, you checking my pockets? No, we know. Like, we see so many incomes and so many career. We know what's normal and what isn't. And so this particular person had a job, and I was like, okay, got the pay stub. I'm clicking. I'm going through it. Side note: his co-borrower was in jail.
stop.
Okay. The plot thickens. Okay.
Could he be a non-occupant co-borrower?
The plot thickens. The co-borrower was in jail, and so he gives me a great story, and that's another reason why I knew things wasn't quite right. He gave me way too many background details to make it warm and fuzzy, right? I got my kids and all this, and I mean, going into it, I'm like, oh, that's great. I get the pay stub, and I'm humming along, and I'm gonna be honest too. Loan officers are not detail-oriented people, which goes back to what I was saying at the beginning. Where you see me, it's 6 people behind me that's gonna double and triple check what I thought I saw. So, for whatever reason, and I still don't know to this day what possessed me to do it, I went back into the file a couple of days later, and I started looking at the pay stub. That pay stub was dated for 2022. It was December 2022. The loan application was December of 2021.
Now
I
that got to
know.
be
I can't make this up. I cannot make this up. And the excuse was, oh, oh, our payroll, it just changed. Hold on, wait a minute. Let me let them know that
the next year.
I'm you so you're the only one in the company that had this issue. Your payroll. So the bank deposited a check for 365 days from now. Mm.
In
Oh.
this in this guy's defense, though, like he was full. That guy was full of shit. But in a borrower's defense, I have seen a couple of times where companies change over the
Mhm.
payroll system, and it really messes up their pay stubs. And also, borrowers that are in unions, like people that are fighting over their pay,
Mhm.
like that work for major cities and things like that. I've seen crazy stuff happen on the pay stubs because the payroll department might decide, you know what, we're in a union, we walk it out today, right? And then none of the pay stubs be right. I have seen that happen twice. Shout out to the city of Philadelphia. But I have seen that happen
We
twice.
don't have those issues in the South. We don't have any unions. Okay.
Listen, big cities. Yeah.
I mean, shout out to Planning with Amanda. I don't think I've seen you here. Thank you so much. I appreciate you coming to kick it. Make sure you like and subscribe, please. Thank you so much. She say, not jail. I know, didn't expect that. That was a plot twist, right? Yeah, I'm telling
Right.
y'all, we see all
Right.
kinds of stuff. We see y'all. I remember during COVID, I had a refinance. That when you refinance, like you can't just act like you don't know that somebody else is on the title or deed or the loan.
Mm-hmm.
We go know, and whatever the scenario is in your relationship, the person probably gonna have to sign off on some. And I encountered a couple of scenarios where the spouse was no longer in the home for one reason or another. So that is a real thing. So let's see. Oh, here's a good story about a situation with income. Um a lot of people are self-employed or may work for a family business.
Mm.
So pretend that Sahad is my sister. When I work under Sahad, Sahad owns Sahad's mortgage company, mortgage match mortgage company. And I called Planning with Amanda. Hey girl, I want to get a loan. I work for my sister. I do mortgages at the mortgage match mortgage company. Okay, cool. Planning with Amanda is gonna be like, all right, girl. Income, assets, documentation. She gonna collect it all, and then she's gonna report back to me and be like, yeah, well, you can only get a house that's 275. Well, it ain't no 275 houses in my neighborhood. So now my thing is,
What if I get a
okay.
raise?
Oh no. Yeah, what if I got a raise, right? Yep. Okay. Planning with Amanda is gonna be like, oh, well, do you have a raise coming? Because we're not gonna make false assumptions about anybody, right? But because Planning with Amanda has had this conversation and she know how people get down with the get down when they get time to get what they want, she's gonna answer the question. Planning with Amanda, she's gonna say, oh, okay, well, do you have a raise coming up? And just suppose, it's the middle of the year or the beginning of the year, about the time when people get raises. Yeah. Oh, yes. Planning with Amanda is going to say, okay, great. Do you have some sort of letter indicating it, some sort of documentation saying what your new salary is going to be? Well, I'm going to say something like, well, how much do my raise need to be? Oh, whoa, wait, hold on a minute. Planning with Amanda's gonna be like, oh, wait, hold on now. What you? What are you asking? Are you asking me to coach your income through this transaction? Oh,
Sure is.
mm, we got we having some friction now. Okay, so me and Planning with Amanda get our phone. And so now things are stuck. Come on, Planning with Amanda. All right now, red
Red
flag.
flag.
My good sis know what's going on. So what's gonna start to happen is Planning with Amanda might start to kind of slow play me a little bit. Okay, she kind of see what's going on, and she's gonna start slowing down. Like, oh, this is different, right? Well, what people don't realize is when there is a familial work setting, we're going to ask for certain documentation to make sure that I work where I say I work with who I say I work for.
Mm-hmm.
We are also not going to allow Sahad at the Mortgage Match Mortgage Company to verify my income. We got to figure out something else because
Right.
we're family, you know,
Mm-hmm.
we're family. This is no longer arm's length on the side of who we're starting to verify income and asset like a third party. It's a little bit murky. It's a little concerning. Like, this could go any kind of way. I don't know.
Mm-hmm. Where
Well,
you go from executive assistant to you got a promotion to director of operations.
absolutely. And if you think that I am making this example up, you are wrong. This literally happened to me talking to a buyer. He was a younger guy and he got his dad on the phone, and the dad is like, I can't believe you're being so difficult about this. Well, you better believe it. I
I've
need
gotten four
more.
mortgages before. Yeah, 30 years ago.
Exactly. Or what is your four compared to my four last month? That's the thing. Like, people don't realize how much we see, how rapidly this moves. I don't care nothing about your real estate portfolio. You don't know more than we do.
Mm-hmm.
You don't see more than we do. And so Planning with Amanda has now made a little notation in the file. Okay. And then we just gonna, and the situation's gonna play out however the situation plays out. But that is one thing that I have seen. So if you are someone that works for a family member, we're not saying that you can't work for family. What we're saying is work for family the honest way, and understand that there's going to be some additional questions that are going to be asked, and additional documentation is going to be required of you, if that is the case. But that is definitely the perfect storm for mortgage fraud to exist. Let me see. All right. Knowingly applying for a mortgage with income that no longer exists is a thing. So I started
Regular.
I started the loan application, 45 days ago. I was working for ABC law firm. I was making $107,000 a year. It was great. We're humming along nicely. And then something happens at work and I'm no longer there. I don't know if they broke up with me or if I broke up with them, but I feel like, oh, well, I've already given them the pay stub. They'll never know. We're going to call, we're going to verify up to the last minute that, hey, you still work? They still work here? What's going on?
Right.
All right. You got
Mm-hmm.
there. I cannot stress this enough. When I tell you that we cross check everything, even your name, we cross check absolutely everything. We
I
Google
had somebody
how
get
far
caught.
your job is from this house that you say you're going to live in. Everything is cross reference, and especially the income. If you've told us that there's a particular income that we're going to rely upon, that you are going to make this mortgage payment on time for the next 36 months, because that's the way that we determine whether or not this is a performing loan. We're looking back at the last 2 years of your life to project the next 3 years of your life. Who are you before you met me, and are you going to keep being that same person after you leave me? That's what we want to know. If you came in and you making six figures and life is great, and then your life falls apart and you don't raise your hand and say something, how do we know that this payment is going to be made on time, for the next, 6 months, 12 months? Believe it or not, I've had loan officer friends at other companies that have had loans to close and the person didn't make the first payment. These
I
are
had
real
somebody
things.
get caught. So when we did the verification, the credit check right before closing, they had a credit inquiry, and the credit inquiry was from an employer that they had applied for a job with. And that's how we got alerted to the fact that, why would somebody, are you applying for another job? And myself, my assistant, everybody just was like, this was after he was still with his job, right? He quit his job right after that verification of employment was done. He knew he was getting clear to close. He went and quit his job, and because he had applied somewhere else, and they checked his credit, and that's how we found out that he wasn't working there no more.
See? Now, again, sometimes it's totally fine to do that as long as you raise your hand, say so. We are never going to stop you from making more money. Let me be real clear. We want you to make all of the money so you can make all of the payment on the first of the month, every single month, because that's when the payments are due. Every single month is the first. Okay. It's just a right way to do things. And if you appear to be moving with any type of impropriety, it's going to cause a concern. And underwriters' names are attached to these loan files. Loan officers' names are attached. Realtors' names are attached. You get too many loans that aren't performing the way they're supposed to, it causes a problem. So you doggone right, some underwriter might not have a good feeling. Hold on.
And start asking questions.
Lots of questions. Lots of questions. And it isn't because you are a bad person, but it's because maybe the person that hit their desk right before you was a bad person and didn't
Or
do
they
what
want
they
to keep
said
their job.
or they want to keep their
And they
job.
just want to make
Absolutely.
they just want to make sure.
Absolutely. Yeah, that's a big thing. So, y'all, please, we don't mind you making more money. Just be honest about it. Don't quit your job and think that we're not gonna know, because we're gonna find out. It's gonna fall apart. Not disclosing new debt on a credit report. If you get a new car, that's the thing. If you've taken out some sort of equity line of credit and it hasn't hit your credit report yet, because you actually can own a house, pull out an equity line of credit as your down payment for your next house. That's completely fine. We don't care. We just gonna have to use that payment against you. And if we don't have all the information that we need to make a credit decision and determine what your risk level is in terms of that lender's risk appetite, you're being deceptive and it looks fraudulent. You're not being honest with the lender and you're not being honest with yourself. That's another thing that I see. Let's see what else.
Straw buyers.
Straw buyers.
Yep. We can't
Y'all,
qualify. My dad is going to purchase our primary residence for us because, we don't qualify. No, your dad cannot do that. That is a straw buyer when you have someone else buy the house for you in their name.
oh, it could be in their name. It's just gonna be an investment property.
But it's going to be an investment property. That's right. And it's not the primary residence.
So let me share this real fast because I did share a little bit earlier, but I want y'all to see because she brought it up again. Let me see, is this it? Yeah, I be struggle streaming over here. All right, so here you go. Straw buyer characteristics. Who is it? What does it look like? All right. So the mortgage pay, so a straw buyer is a loan applicant that's used for fraud perpetrators to obtain mortgages and are used to disguise the true buyer and the true nature of the transaction. So that means that um ABC buyer really wants to get an investment property so bad, and they might be like, "Hey, Dad, can you get this house for me? Just tell them that you're gonna live there," and they go through the transaction. The mortgage payments are actually going to be made by a whole different person other than the borrower. So that means, hey, Dad, don't worry about it. You just go through the whole thing, and I'm actually going to be the one to make the payments. Don't worry about it. Just get to the closing table for me. The loan is usually an early payment default because I hadn't made my payments because I'm like, oh shoot, I really don't qualify. Dad qualified me. What we gonna do? The first time home buyer with a substantial increase in housing expense, y'all, there's something called payment shock that we talk about all the time behind the scenes. Does this make sense? The buyer did not intend to occupy the property. That's what I just said. Hey, Dad, get me this house. Tell them you're going to live there, but you can stay at your house. Don't worry about it. I'm going to have some renters that's going to occupy this, this 3-bedroom single family home. There's no real estate agent involved. Power of attorney might be used. Okay. It's several things. Oh, this is the big one. Use of gift funds for down payment. So that means that I'm just going to be like, hey, Dad, I'm going to gift you the down payment because I'm a family member. You can get gift funds from family members, right? That's totally legal. There's nothing wrong with that. But if Dad is saying, I'm going to use this as my primary residence, but in reality, he knows and I know that I'm going to be the one that's going to use it for something completely different, that is considered a straw buyer. You are representing something that isn't true. You just as fake as the thing. That was the straw man, the tin man. What was it? On the Wizard of Oz? That the scarecrow. That's it. The scarecrow on the Wizard of Oz. That's your whole thing gonna fall apart and go up in flames. Okay, so that's what straw bar is, and we do see that. I mean, I don't really see it. I mean, I might see it, not realize it, but yeah, it's a thing. But yeah, so one thing I want to add to, and this is the last point on income. Sometimes leaving income information out is okay and it's not considered fraudulent. A lot of times people get the loan application and like, I'm not signing this because you spelled my name wrong. I'm not signing this because I make $36,284 and you put $36,000. Okay. Sometimes we're not going to include your overtime or your bonus income because you qualify without it. It's not a big deal. Don't worry. It's okay. That doesn't mean that you are being fraudulent. You know when you are moving fraudulently, and we do too. So just because everything isn't exact all the way through doesn't mean that you're doing anything wrong, and it doesn't mean that we're doing anything wrong, because the loan application is something that is fluid throughout the process. Things can change, things can be added and subtracted as we go based upon the documentation and based upon any new information that's uncovered along the way. All right. So I definitely wanted to make sure I highlighted that.
I want to add to the income fraud. For those that participate in the down payment assistance programs, you need to understand that the lender has their rules, and then the down payment assistance program that you are participating in has their own rules on top of our rules. And sometimes bank statements, things that are not going to be a problem for us, are going to be a problem for the down payment assistance program. So a perfect example is you don't share with us that you have a business on the side. We didn't need it to qualify you, so we're not going to include it. But then it shows up on a bank statement that you have another source of income. We may not ask about it. Down payment assistance program, they might ask about it if they have to receive the file. And it could be very minute income. However, if you're trying to get some, quote unquote free money, you got to follow those rules. And that might not mean anything to you, but you didn't include that income. They want all the household income. So that's a big one that comes up.
Yeah,
Oh, well,
we
I don't
do.
really run a business. I just do this on the side, but you have income you didn't tell us about.
Mm-hmm. Yeah, you definitely dropped the gem on that because I didn't realize it. So the income. So you're saying for down payment assistance, they have separate guidelines.
Yes. So most states have a bond program or a housing finance agency with the state. That's the state is the investor and they service that program. Essentially, a loan has to be almost clear to close, and we as the lender have to completely clear the file before they get the file and re-underwrite the file. So we'll use North Carolina for example, or South Carolina. Ooh, we don't care about deposits that are less than half of your monthly income because that's the traditional conventional guideline. That's what Fannie Mae tells us. The state program down payment assistance, they care. Why? Because they think that you have another source of income. So they see a deposit. What's this $250? Now, it's way less than half of your monthly income. We don't care, but the state cares. Now you have to explain what that is. Where did it come from? Is it consistent? And then they start combing through things. So if there's income restrictions around a secondary program for down payment assistance or a grant that you participate in, and they use the words household income, understand that there may be a second level of review of what's considered your household income. So just brace yourself.
I love it. I absolutely love it. Oh my God. Mortgage Match on IG. She out here dropping gems, y'all. Make sure y'all go follow her over there. She got me on that. Okay. Now I am certified for some down payment assistance programs, but I don't do a lot of them. And
Mm-hmm.
so my knowledge on that is somewhat limited. So I appreciate her being able to stand in the gap and provide that value. So Professor Cutie Pie, she said, you have me thinking differently about my plans. So I want to purchase a rental property. I'm just now, what she said, I'm now just a PRN travel nurse. So no set hours. How can I legit qualify? Can you put in the chat how many years you have been in the nursing field?
Mm-hmm.
So I can
And that
kind
can
of
go a lot of different. That can go a lot of
it
different ways.
absolutely can. Yeah. So let's play it out. So are you wanting to purchase a house to live in? And see, that's another thing. I appreciate her saying this. As a travel nurse, right? You're transient. We need to tie you to somewhere. You can't be like, oh, I'm gonna be in California for the summer and I'm gonna purchase a primary residence in California. Don't nothing tie you to California. Like you there for a good time, not a long time.
Mm-hmm.
We're gonna need to see some documentation that shows that you got some roots somewhere. And those
Mm-hmm.
travel nurses making money hand over fist. Now they pulling back on some of that income now that they're offering, but the travel nurses, oh my God, y'all. This girl, I'm never stop telling this story. This baby came, she couldn't have been no more, I think 26 years old. She was making $124 an hour.
Go ahead, girl.
If you ain't
Good
a
for
travel
her.
nurse, you better get the being one. She was making all of the money, not some of the money. Okay. What
Mm-hmm.
she wanted to buy a house, but everything checked out. She'd done it for 2 years. She was with the same staffing agency. Like it was some continuity that was there. She lived in an area, the apartment was there, all of those things. So it wasn't a problem. However, you have to think about the fact that underwriters see that travel nurses have plenty of money and nothing to do with it, you know,
Mm-hmm.
and they're all over. So it would make sense that if I don't know anything about the underwriting process and I'm in travel nursing and I have all the money in the world, oh, I'm gonna buy a house in California and then I'm gonna rent that out. I'm gonna get this and I'm gonna go Tennessee. And you have 3-4 houses that you didn't claim that you're gonna live in, but they were actually gonna be for investment reasons. And so she said she's been doing it for 2 years. and not as a primary residence. I do have one in Maryland, which I will keep, but I want to purchase a rental property in Wisconsin. That's totally fine. If you are purchasing a rental property, no one cares where you are. It's only when you are purchasing a primary residence and you're trying, excuse me, it's only when you're trying to use the benefits of a primary residence to actually make something an investment property. So if you've been in that same field of work for a couple of years and you are on the same type of pay, which goes back to the idea of changing jobs, we don't care anything about you changing jobs. What we care about is the how you get paid. Is that how you're getting paid going to be different? If you are a staff nurse and you get a salary of $64,000, on average, plus shift differential or whatever, and you tap out around say 70,000, and then you go to travel nursing, and we're not so sure because now you're making $124 an hour, and you've been doing it for 3 months. We have no real reason to believe that you're gonna make $124 an hour forever.
So what she said about specifically the PRN travel nurse, so Professor Cutie Pie, there's a couple things that you can do or try to put into place to kind of safeguard yourself. You've been in the industry doing what you've been doing long enough. PRN is going to be looked at as variable income because it can fluctuate based on the contract that you pick up. So what we do as loan officers is, the first thought is, well, we're going to take a 2-year average, right? Here comes the next level of complexity. Shift differentials, what unit you're working in, that's going to change too. And it becomes kind of, it starts to get complex. So the best thing that I would suggest is when you're ready to apply for a mortgage and you speak with your loan officer, some loan officers do it, some don't, but have them send your loan to underwriting for your pre-approval. Let them tell you, this is how much income we're going to be able to qualify you for. This is what we're going to be able to use up front based on what you provided us, because you're PRN, which translates in mortgage world, variable income. Now, that may not mean anything to anybody else, but it's real scary on this side. When you think
everything
variable, it could change. It could go down. Another way is if you work with a staffing agency or a primary recruiter that always places you with hospitals. You can actually go to your recruiting company, and you may change recruiters, but like a staffing company, you can go there and get a letter from there. And hey, you're contracted. You don't take any contract that's less than X amount of dollars. We can take that too, right?
But you got to have some history. Like it can't.
History
again. Consistency is key in all of that. I have gotten quite a few travel nurses approved last year, and I had a girl approved in April. Totally fine, no problem. Well, I noticed that September, October-ish, I had a whole different girl, and they had the same staffing company. I went back in the old file, and I was like, oh shoot, this the same lady that did the verification of employment on the other one. Well, wait a minute. It was some incongruencies. They got paid virtually the same way, not the same dollar amount, but everything was the same. I said, well, hold on. Well, this one was fine. Why wasn't this one fine? So being able to have consistency, not just with what you're doing, but who you are working with, is very, 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 very important. Okay. So you can absolutely purchase an investment property if you want to, but the amount of what you qualify for is going to be based on how you're earning income now. So flip that around. If you decided, okay, I'm making my $124 an hour right now as I'm traveling, but I'm going to get a staff nurse situation, and now I'm going to max out around 70, we're going to qualify you off of that. We don't care nothing about them $300,000 that you just made, over the last 3 years, because now that's not something that we can see in your foreseeable future based on the dollar amount that you're making now. Okay, that is a great question. But again, it's all about documentation and it's all about consistency. So don't bounce around too much if you don't have to.
I just sent you a message in the chat.
Okay. All right. Okay, well, I'm gonna wrap it up. So hi as she's gonna drop off. I'm gonna go through a couple of red flags here and answer any questions that anyone has about the home buying process. As always, during the week, I chop up different segments into shorter bite-sized pieces so you can go back through and get whatever information that you want. But Sahad, I really appreciate you for coming to hang out with me today.
Thank you.
And we got to do it again. This was fun.
Thank you so much. I really appreciate it. When I get my YouTube life together, okay, maybe we can come back and do something. But I appreciate you having me, and this was a really, really great live. You're
Yeah, it's
dropping the gems
important.
over here. You're giving the real news on this channel.
I don't want to be a gem dropper. I don't want to be all you gotta do. I don't want to be the girl. I got a girl that can get it done. I don't want to be. No, I'm not. I follow the rules.
Good.
All right, I appreciate you. All right, that was fun. So want to go real quick about some of the red flags that we see, because a big question that I always have is, how y'all gonna know? They'll never know. They'll never guess that I don't live there. All right, well let's run through it, because I mentioned it a few times that we cross-check information. So what exactly is that? Okay. And I'll go through it quick. I didn't realize it's almost midnight. Ooh, child, I could talk about mortgages all day. Mortgages and wine. All right. Cheers. Cheers to new home buyers. Doing it the right way. And like I said, I know most of the people that subscribe and, comment that y'all not doing anything unscrupulous, but I just want to make sure that you all are aware that there are people that will try to whisper sweet nothings in your ear. All right. So some high level red flags: social security number discrepancies on the file. So you might apply. Sometimes it'll be a typo. We'll make sure we're going to check another system. We're going to take that system. We're going to look at, your tax returns, things like that, where social security number might be. And we're like, oh, wait, hold on. Something's not right here. And that's how we're going to be able to reconcile that. Address discrepancies, we'll ask for letters of explanation. You said you lived at 123 Main Street, but the credit report is saying you lived at 124 Main Street. Or it's showing that currently you live at 124 Main Street on your pay stub. All of that information is going to have to match. And if it doesn't, you're going to have to write a letter of explanation. Verifications addressed to specific parties' attention. Verifications completed on the same day that they were ordered, which goes back to the example that I had where, planning for Amanda was doing my loan application for me, and I was, gonna get my sister to verify my income. Sometimes it can be one day, but most of the time it's not. Verifications completed on weekends or holidays. If it's weekends or holidays, those departments tend to be closed. Documentation that includes deletions, correction, fluid, or alterations. This is something that was really big in the early 2000s. Loan officers were willing to do whatever it took to get the loan done. That would mean I'm going to white out, your income at the bottom, or this large deposit, whatever it was, to make sure it was something that could be done in closing, get the loan to closing. And that's not something that we do today, which is why when we ask for you to submit documentation, it has to be in a very particular format. If you go online to Wells Fargo and you're printing your bank statements, That's completely fine, but we're going to need to make sure that we know that it came from there. So we're looking for the URL. We're looking for your full account number, or your, the account numbers need to match whatever the credit report says. We're looking for your full name, your address, all of that information got to match to make sure it's right. Numbers on the documentation appear to be squeezed. You guys, back to that pay stub that I described before, it wasn't right. We're looking at the fonts, the handwriting, the type styles on the document. It might be Times New Roman at the top, and then by the time I get to the bottom, it's Arial. It might start at 12-point font at the top, and then by the time I get to the bottom, we're at 10-point font. What is going on? This doesn't make sense. Major corporations do not operate in sloppiness. They have uniform ways that they put out documents. If you are getting a tax document, they look the same for absolutely everybody in the nation. Why does yours look different? Why does yours have bold print where it shouldn't be, or yours has different types of fonts where it shouldn't be? We notice all of those things. So when you're online and somebody's offering to make you a pay stub for a small fee, while I'm sure that they feel that they are being helpful, we can see, because again, we do thousands of loans a year, tens of thousands of loans a year. We are familiar with employers and what employers use what, and what those pay stubs look like if they're distributed through certain sources. So everybody cannot be the smartest person in the room, no matter how hard they try to be. We'll go through the mortgage loan application. When you complete your loan application, we want to make sure it's signed and dated. So if it hasn't been signed or it hasn't been dated, we're going to send it back to you. I need you to sign it. Guess what? We're going to look at your signatures on that application, as well as every other loan document that you have given us. We're going to look at your driver's license signature. We're going to look at any signatures that you have signed on anything else to make sure that, okay, this looks right, it aligns, this is okay. Your employer's address is only a PO box. That's not going to work, because you have to show up to work somewhere. Yeah, you I won't tell that story right now. The buyer currently resides in the subject property. This is one of those scenarios where it's rent to own. Maybe potentially, it's not that it's anything wrong with it necessarily, but we're going to ask for some additional information around that. Are your telephone numbers the same for your employer and you? Oh, I thought you said that you worked at Bank of America. Well, why did I just call your cell phone? Or if your work number is a family member's number. When I was in college, excuse me, I had a friend that went and got an automobile loan, and her mom was her employer, and I believe her grandma verified her rent. So people do these things all the time, but we'll pay very close attention to what makes sense. Are those phone numbers the same when they shouldn't be? Another red flag as it pertains to the sales contract, we're going to look through that very, very closely as well. You can see that here it's a non-arm's length transaction. That means that you know the person, or that like it's a relative or an employer, somebody that you would feel the need to be a little bit nicer and kinder to if you didn't know them, which is nothing wrong with that. You can absolutely sell your home to someone that you know, your friend or your family member. It's a great way to pass equity along, but it is not something that goes unnoticed by the underwriter. If the purchaser is not the applicant. So we're looking, are the people's names on the loan application the same as on the purchase contract? If that doesn't make sense, then they're going to ask some additional questions. Earnest money deposits. We're looking at every single thing. The real estate commission is excessive. It's above what the market average might be. One other thing. And so the credit report. So, okay, I need to highlight this real quick and then I'm going to get out of here and be done. Y'all look, I have seen so many times where loan applicants feel that they have a lower credit score and or they don't have enough credit and they go and they get authorized users to go on the credit report. You become an authorized user and you purchase a trade line to build up your credit. Y'all, we're gonna know. We're gonna know. We're gonna see. If we were to remove those trade lines, could you stand as an applicant on your own? So somebody buying a $450,000 house out the gate and graduated from high school 3 days ago. Hold on. Not saying that you can't do it, but we're saying, wait, we're going to have to ask some additional questions. Social security numbers don't match up. Duplicate social security numbers. A recently issued social security number for some of the people that may be from another country. Your prefix in your social security number tells us who you are. My prefix is in the ones. That means that I was born up north. Prefixes in the south are in the twos, and so on and so on. I won't tell you what the prefix is for someone that is a recent immigrant, but just know that those numbers do mean something. Liabilities on the credit report are not on the mortgage application. That goes back to you just went out and you bought a car or you got an equity line of credit. It hasn't hit your credit yet and you didn't tell us. There is a separate document that you have to sign and attest to saying that you have told us all the debt that you have. It's called an undisclosed debt report. You're going to sign off and say, hey, yep, I bought a car 2 days ago. It isn't on there. My payment is $457. Trade lines are open at the same time. That happens a lot. The authorized users that I just talked about, that's not a shortcut. I don't know how many ways I can say it. It is not a shortcut. Numerous credit inquiries can be an issue. That could mean that you've been shopping around for credit and everybody's telling you no. Well, why is everybody telling you no if you have a 650 credit score and the income works? Why are people saying that you can't move forward? That's something that we're going to take a deeper look into. Missing pages. We ask for you to send us all your documentation, including blank pages. We don't want anything that's missing because you may be omitting information that the underwriter needs to assess your credit risk. Employment discrepancies. This going a little bit too far, I think, because sometimes you might not remember that you worked somewhere, or if you were only there for a month or so, but it's on the credit report 9 times out of 10, and we will be able to cross-reference that to make sure that the information you provide on the application is the same as other sources. And then your social security number, death, and fraud alerts. If for some reason you need to get a person off of a loan because they have passed away, we're going to ask for appropriate documentation for that. So that was really the one I wanted to highlight. Those are the red flags that we look for, and those are the red flags that we see. We are not being mean to you when we're asking for additional documentation. It's just that something that you either aware of or something you may not have been aware of has popped up, and if it's nothing wrong, it'll be ironed out and it's no problem. But if it is something that you are struggling with to get answered and the underwriter is not getting a sufficient response, you may find that you will not be able to get that loan. In closing, I will tell you, I've seen influencers get wrapped up in situations where they weren't being honest about information that was provided on mortgage loan applications. I have seen influencers share stories about, oh, that loan officer, and they wanted to berate that company about how difficult and challenging it was for them to be able to get the loan. But I have a loan officer's ear. No one in the loan transaction wants you to not close. Everyone in the transaction would like for the loan to close, everybody gets paid, and everybody's happy. If something is wrong, if you are submitting information that doesn't seem like it is above board, that doesn't pass the smell test, lots of pushback and lots of friction is going to be there. So whenever you all hear stories on social media about someone having a disaster of an experience, I can promise you some information was misaligned along the way, which is what created that friction. It could be based on their income, it could be based on the assets. It is some sort of friction that was either uncovered. Well, it was definitely uncovered along the way. And that's why they feel that, oh, well, things was going fine. And my loan officer, they didn't know what they were doing. And just please, 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 now that you know, please share with your friends that you are not going to be able to get over on a trillion dollar a year industry. If you think that you are going to misrepresent things, like we don't have access to Google or access to Instagram or Facebook, the underwriter can see. They're going to know. There's so many different ways. And it just really disheartens me when I do the very best that I can to try to get someone approved, and I later find out that that person has misled me, because it makes it even more difficult for the person that comes behind them that may need that additional hand holding and support. As a loan officer, I'm going to do everything that I can and fight for you all the way up until it doesn't make sense anymore. Once things don't start making sense, I think you're going to find that a lot of loan officers are going to be mean to you. They're going to ghost you. In some cases, I do hear a lot of people saying, oh, well, so-and-so, they never called me back. Red flag. But y'all, this live went a little bit longer than I expected. I thought it was going to go about 90 minutes, but it's been almost 2 hours. But I do appreciate you all for sticking with me. If you haven't subscribed, please do subscribe, and like and share for anybody that you know that may need this information. My contact information is going to be below, so please reach out to me if you are interested in me taking a look at your scenario to determine what you need to do to be able to become a qualified home buyer this season. So thank you so, so much. Thank you, Professor Cutie Pie. I will be back again next week with my Mortgage Boss Talk Tuesday. I don't know if I'll go this late, but it'll probably be somewhere around that 7 to 8 o'clock hour, and try to keep it limited to the hour that I usually do. But I'll chop this video up so you guys can catch the smaller pieces, as I stated before. So anyway, until next time, go check out the rest of my videos to keep you entertained throughout the rest of the week. I'll talk to y'all later. Bye.